traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So let's pull up our analysis. Dang it, I keep meaning to update Office and I keep forgetting. All right, I know you guys are going to start harassing me. You know, like, Blake, will you please just update your Office 360? Yes, I will do that one of these days. All right, so let's go to the euro dollar. I had to redraw everything yesterday on the euro dollar because I got into a euro short right here, not right there, but right here. Okay, I was looking at this trend line here, right? And I got short right there as we were into the trend line, right? And we spiked up around 109. I added a little bit, and I'm like, you know, I got to figure out where my, you know, I knew my risk was above 110, but I didn't want to risk all the way up to 110 when the euro was spiking and it had been moving all day, you know, because the euro had been moving higher all day long, and I figured, okay, it's not going to get to my stop, but I gotta find out where it's going to actually pause. And yesterday, so I had to, you notice I kind of killed all my drawings because I had to redraw everything to make sure that I didn't risk as much as I had put my stop out. You know, because when I trade, you guys know this, most of you know this already. Whenever I get into a position, I put in my stop is usually around 100 pips above or below the market. Okay, so I'll get into a trade, like I'll buy the euro and I'll put in a stop 100 pips below. Then after I'm sit back, I'll reevaluate and readjust my stop more according to technicals, making sure my risk is in line, you know, everything else. So when I got into the trade, I had my stop. I threw it in above 110. You know, it's always for account preservation, but then afterwards I have to go back and you know, make sure that everything's in line. So I started looking at this horizontal resistance here, and I said, okay, and I go, you know what? There's channel resistance here. I took these lows, you know, connected these two highs, and I said, oh crap, you know, we got a channel. And so that's really what, you know, we respected. Here's the great news. With the euro dollar, I know where key resistance is now. So do you. It's right here. That's key. You know what's also key about that is if the stock market comes under pressure and that breaks, guess where we're going? Probably going to revisit this 110.50. Now, why is that important? Well, because if you go out to the daily chart, you'll know this. Actually, dude, roughly, give or take, you know, that, my friends, is possible. Okay, so what does this all mean? Well, what this all means is if we break this 109.50, okay, we're probably going to retest this, you know, 110.50, and I will tell you this, guys. You guys know I'm a dollar bull, but I will tell you, if we break above this 110.60 level, I'm going to have to change my tune. Okay, now, that's a long way from where we're at right now. We're at 108, 108.60. To get up to 110.60, that's a lot of movement to get up there. And actually, my first course of action would be like this. Excuse me. Hopefully by the end of this weekend, I'm going to get over this cold. I'll be really happy about that. It's not so much I don't feel bad. I haven't felt bad the last couple of days, but you guys know when you have a cold, and the last, you know, as you're getting better, you're mucusy and you're, you know, just kind of coughing everything up. That's where I'm at right now, so that's why this doesn't sound great. Hold on, I'm just hoping I can get rid of all that. by, by next week, by Monday. So what I'm thinking here is, if we break, these highs going early into next week, we're going to, here, I'll just draw it out with a pen that I can erase. If we break through here, we're probably going to, come back up here early next week, and then I'll be able to look for a short right here, okay, right at this 110.50. Obviously, if we break above the 110.50, then game on. It's a game changer as far as the dollar goes. But what I'd really like to see with the euro dollar is I'd like to see us break through here, move higher, and I'd really like to short the euro dollar up against this 110.50 area next week. That to me would be the great trade going into next week. Do I think we're going to get there? I don't know. I mean, a lot of it depends on today, obviously. Because if we have a weak jobs report, the dollar could come under some pressure. So, but then again, on a weak jobs report, maybe the stock market rallies. And stock market rallies, maybe the euro comes down. I don't know. It's a tough, it's a tough call. But anyway, I know for today, that's key resistance. And even if you guys are like, well, I don't trade the dollar yen, Blake, I only trade the euro dollar. If you trade the euro dollar and that's your instrument of choice, why don't you wait for us to get back up to trendline resistance and then short it, or up towards 109.50, 109.30. That I think is going to be a better risk reward trade right now, is trading it up here on the short side versus trying to flip a coin right now. All right, so 109 resistance, 1.0950 key resistance today, because if that breaks, then like I said, we're going to see 110.50 going into next week, and that's ultimately what I'd like to see. I'd like to trade it up there, and longer term, as you guys know, we're in a here, longer term. Okay, I think we're forming this bear flag pattern longer term. So let me just do this, do that. See, personally, I think this is what's happening. Because in the past, we've been looking at this like here, I'm going to freehand draw this. We've been looking at this like a flag, right? Freehand, right? So we've been looking at it as a flag pattern. It can still be a flag, but to be developing a bearish wedge with lower highs, consistent lows, which eventually gives us the breakdown, which is the same. It's the same pattern. It's just a pattern inside of a pattern, but it's the same thing. Like I said, or like I've told you before, as long as we stay below this yellow trend line, it's bearish. Period. End of. Any which way you slice it. Okay. So, like I said, what I'd ultimately like to do is I'd like to see a break higher and then be on the short side going into next week at 110.50. That would be a great opportunity. Now, we may not get that opportunity too. We could get a strong jobs report today and the euro goes slump all the way down to 107. It could happen. Just because I hope this is going to happen doesn't mean it's going to happen. And I don't have any euro dollar long side. Actually, I take that back. I have both short and long euro exposure because I am long the euro pound. By the way, I bought the euro pound yesterday at just so you guys know, I bought it at 74.30. Sold it last night at 74.78, I think, and then I bought it again this morning at 74.39. So I've been playing the euro pound. The euro pound is a currency pair I don't mind holding through non-farm payroll because it's not going to be affected too much by non-farm payroll, obviously because it's a cross rate. But I've got both the euro short and long exposure on the crosses because I'm short some euro Canadian. But anyway, as far as the euro dollar goes, I have no exposure. What I'd like to see happen is I'd like to see it rally and then sell it. but I could be completely wrong. We could just sell off directly. So where's support going to be? All right, if we're going to fall today, like let's say we have a strong jobs report and the dollar just strengthens, you know, support right now is right where we're at, or pretty damn close. I would say it's right through here, all right, is where support is at. But let's actually take a fib from the low to the high, because, you know, we can actually say this is the low right here and this is the high. Okay, there's a 38% retracement. A 50% retracement comes in right at this spike low. So because we have some confluence between here, here, and here, I would say that's decent support for today. That comes in at 108 and a quarter. 1.08 and a quarter. And guess what? I bet you just before non-farm payroll, we're going to end up right here around 108, 108.85, 108.90, smack dab in between the high and the low, which will put us right in the middle of this stupid range, which, as you all know, before a big news event, we usually end up in the middle of the range. Right, that's what usually happens. Okay, so let's go over to the cable. Here's the pound. So the pound is a big whopping piece of doggy dookie. It is just, man, look at this thing. Absolutely getting crushed. Just crushed. It's like unbelievable. The pound cannot get a leg up. It's amazing how weak the pound is. It's like almost shocking to me. It's like this thing will not move higher. Yeah, we had a bounce yesterday, but I mean, look at it. Overall, it's just it just cannot. I mean, in order for the cable to take off the downside pressure, we have to take out this blue trend line. If there's no if, and, or buts about that. So at this stage in the game, that means we have to take out these highs at bare minimum, okay? Which now comes in at 146.40, okay? 146.40. Now we did get a bounce yesterday from being really oversold, but you know, overall, the cable is just weak. It's just weak, and you know, I know we've had that labeled as bearish for a while, but man, it is weak. Obviously, you know, we do have a lot of support down here. One thing that the pound does have going for it, though, is perhaps this false breakdown yesterday, but it's not really helping today, is it? Because we had this false break below the lows that were set back in April. False breakdown, pop back up. Obviously, that is not mattering at the moment. At the moment, we're still under pressure. So that means today's low or yesterday's lows are going to be vitally important for bulls, because if we relinquish those lows from yesterday, because you have to imagine there's a lot of people trying to pick a bottom, because there always is. That's the great thing about the markets. The one thing you can always count on is there will always be traders, especially in a strong move. You can always count on this. And you can't always count on much. You can always count on this. Whenever there's a strong move in the market, there is always traders trying to anticipate a bottom or a top. Always. 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 Whether they're Elliott waivers, whether they're fractalists, whether they're, you know, pattern traders, they're harmonic traders, they're, you know, fundamentalists, you know what, it doesn't matter. You know, chartists in general, it doesn't matter. Whenever you're in a market and you have a strong move, either up or down, there are always bottom pickers and top pickers too. All right, so I have to imagine, because of yesterday, you know, people go, oh, look, we had a false breakdown, we closed back above, I'm buying, and I'm going to buy yesterday, okay, and I'm going to put my stops below yesterday's lows. I have to imagine there's a ton, I almost said it, but I didn't, there's got to be a ton of stops below these lows now, okay? So, the lows, 145.32, 145.30, really key support today. 145.30, because if we break that, there's a lot of air beneath there. Like in this case, we have a lot of air down to like 142. There's nothing. There's nada. A lot of open, open yonder down below. So yeah, if those lows get taken out, all the stops get taken, then the momentum traders come in, they start piling in. It could get gnarly. Okay. Let's go back over to, or let's go over to the Swissy. So the Swissy came under a lot of pressure yesterday. I'm still long my position. My cost average of my Swissy is 99.33. Okay, because I added some a couple of days ago when it dipped to 1.0030, and of course, in hindsight's always 2020. And like I said earlier this week, I knew this was key resistance. I knew the 618 here at 101.20 was key resistance. I had my finger on the sell button. I said, nah, longer term, I want to hold on to the Swissy because, it has broken out on the weekly charts, come back down, retest trend lines. I still want to stay long. So, it's the game of holding on to a longer term position, right? So what's happened is the Swissy has been rejecting at some pretty key resistance, and even this morning it did. It's right here. Okay, so now here's, this is your hourly chart. We know that 1.0020 is very strong resistance, and strong support is right here. Let me make sure. Let me delete a few things. Let's delete. Actually, I was going to take that, but that's all right. We're going to put this down as support. All right. I don't want that to develop into a bearish wedge, but there's support. That's resistance. We can remove that. All right. So 1.0020, 99.20. Yeah, I didn't like it when we dipped all the way down there. I was like, holy crap. That'd be pretty key resistance on the way back up. And we are in a range environment. Let's go check out the yen. Here's the dollar yen. So remember, especially if you're tuning in a little bit late, my trade that I'm looking for today, I'm not super excited about the markets at the moment. I'm not, I'd rather see the euro a little higher to short it. I know I explained that to you guys. I'd rather see the euro up, above 110 to be on the short side sometime next week. For me, it's been a really, really good week. I think a lot of the trading opportunities are going to be either in the yen or the Canadian today. So, let's talk about the yen here. The trade I really want to take is I want to take a strong jobs report. So if we get a strong jobs report, like let's say 220, 230, 250,000 jobs, something like that, right? Because we're looking for about 200,000 jobs. Unemployment rate, I think we're looking for 5%. Let's say it stays at 5%, maybe even slips to 4.9. Average hourly earnings, 0.2%, I think is what the market's looking for. Basically, no movement there. Let's say even say that the average hourly earnings pop up a little bit, which give us that scare of inflation, wage inflation coming in. Regardless, I'd like to see the dollar yen spike higher, because if it spikes higher, the trend is bearish. Okay, and you guys know I'm a big yen bull, meaning that I think the yen is going to be, and I know I told you guys this a couple weeks ago, I don't like to make huge predictions going into 2016 or into any year, but I said if I had to put my money on anything in 2016, it'd be buying yen. I really think that the dollar yen is moving lower, but it's not just the dollar yen, it's all yen pairs. I think the yen's going to be strengthening as stocks come down. So I want to be short the dollar yen. I just want to be short it higher. Okay. We cleared 118. We cleared the support down here. We still have this double top that actually extends us down to 116.50. I think we're in process of doing that. But, the market's not straightforward and it's not easy. So what I'd like to see is I'd like to see a rally into some sort of resistance to sell into. So let me get rid of this fib level so to avoid some confusion here. And let me get rid of that 118 support. Let's take this high, okay, to the low. 38% retracement has been capping us. A 618 retracement is always my fib level of choice to sell from or to buy from. So in this case is 119.40. So if we get a strong jobs report today and the dollar yen rallies, 119.40 would be great. Now, the question is, are we going to make it even all the way to there? I mean, that, it'd have to be a pretty damn strong jobs report for us to do that, to make it up there. But frankly, I'm kind of looking for some outsized moves today to trade rather than, just stepping in front of anything. So 119.60, right? 119. Oh, I'm sorry, 119.40. 119.40. I think is going to be key resistance to sell into that strength because I do think we have a bearish trend here. Okay. Now, you might be thinking, well, Blake, I don't know if we're going to make it all the way up there. I don't know. I might be, maybe too ambitious as far as, how far we're going to get. Also note that 119 is a 50% retracement. So maybe even if we make it up to 119 and you want to take a little nibble on a short dollar yen, I might do that as well post non-farm payrolls. Obviously I'll be here covering it live in 26 minutes, so we'll see when it happens. But 119, I wouldn't mind being a seller there either. Now support is obviously key down here at 117, 117.30. Hold on. 117.30, that's obviously really key support. Okay, because obviously if we break 117.30, things going to, pairs probably going to hell, and it's going to be hard to stop. All right, let's go really quick. Let's do the Canadian. And guys, if you're asking questions, today is non-farm payroll day. Really hard for me to answer questions, not because I don't want to, but it's hard for me to. Crude, by the way, is bouncing back, and it's putting some downside pressure on the Canadian. I am short the dollar Canadian. It's a very small position now because I took a lot of my Canadian profits yesterday, but I want some Canadian exposure here. I know I've been talking about it all week. I know I said, probably for the last 3 weeks or 4 weeks, I've told you, hey guys, when the dollar Canadian gets to 141.50 to 142, I want to start shorting the dollar Canadian. I want to start buying some Canadian currency. I know I've said that, and I've probably said that at least 4 dozen times in the last several weeks. So yesterday, when we got to 141.50, I started getting some Canadian exposure. You guys, one of the things that you'll always, I hope you appreciate about me, is I do what I say. I tell you guys things, and then I do it. And that's, and you guys, you listen to me every day, and I have accountability because you go, hey Blake, you said you bought the Aussie New Zealand. What are you doing with it? Well, I'm long the Aussie New Zealand and I'm upside down right now, but I'm still long. Or, yeah, I sold the dollar Canadian yesterday and I'm still holding some long Canadian currency because this has been my plan all along. It's been my master plan. Okay? We finally reached the target on our weekly chart, on our weekly flag pattern. We finally reached the target. And once we reach that target, I plan on buying some Canadian currency. So that's what I'm going to do. But it's Canadian jobs report today. I understand it's Canadian jobs report today, but I'm still going to hold some Canadian exposure. Okay, so yeah, again, it's all about accountability, and it's about being here every day, 3.5 hours a day with you, and talking about it, the good and the bad and the ugly. We talk about the good trades. We talk about the not so good trades. Because if you're a trader and you don't think there's not going to be not so good trades, you're living in la la land. I get smacked around. There's times that I'm off, and it's like, man, I have to take a couple of days off of trading because I'm getting worked. But most of the times we can talk about the good and the bad and how do we work ourselves out of this trade, and those are the key conversations that we have. Okay. Anyway, here's the dollar Canadian, and the dollar Canadian right now, as long as we stay below 142, I'll be on the short side of the dollar Canadian. I know I've mentioned that to you guys 1,000 times as well, and so right now I don't mind having a short. My cost average is 141.16, and it's small. I'm short some Euro Canadian as well, and I'm up 15 pips in that, and I don't mind holding these because they're small. I would love to add, especially if we break through 140.50. Now, there's two key levels of support in the Canadian, 140.50 and 140. Okay, so first level support 140.50, 140, 40.50. Okay, those are your two levels of support for today. Especially if the Canadian jobs report comes in strong. Now, obviously, any weakness, we can take out these highs. Just so you know, any, whoops, I didn't want to do that. Any Canadian jobs report weakness, we can take out those highs and make a run for 142. So I'm going to write in 141.70 to 142. 141.70, and I'm prepared for a move up to there. It doesn't freak me out to know that there's a possibility we can make it up there. Okay, we are in a very bullish trend. I am trading counter trend. When you trade counter trend to a very bullish trend or bearish trend, you have to take small positions. Hence why my Canadian exposure is not very big. Okay. I can build it into a big position, but I'm going to have to see a lot more downside movement in the dollar Canadian, and I'm going to have to see a lot more strength in the Canadian around the markets. Okay, when I come back, we're going to do the Kiwi, the Aussie, the dollar index, the peso, the Nordic currencies. Don't go anywhere. I'll be back in a few minutes. We're going to wrap this up before non-farm payroll in 30. Hi traders, this is Blake Morrow. You were listening to the Morning Edge webinar. I'm going to try to really wrap up this analysis. Okay, so dollar Canadian, we got that on there. Let's go over to the Kiwi. So the Kiwi really trading some pretty critical support. Here's the daily chart. Okay, you see where we're at as far as the daily goes. I want to remove that for a second, kind of show you where we're at. Okay, so this support right here, this is the same analysis from yesterday. You see it all right here. Yesterday we held the 65.85 level. That also happens to be the 618 fib, close to, it's because you got 66. Then we have that spike low. Now we have this trend line that goes through these lows right over to where we're at. So you can see how important this spot is here. Right through here. I mean, this is obviously very key. All right. And the reason why I think you guys should really note that is because if we break through these lows, which we're only 18 pips away, we break through these lows. If you want to be short a Kiwi currency, like long the pound New Zealand, long Euro New Zealand, long Aussie New Zealand, this is the time to do it, because this should open up a lot of downside here. One of the things about the Kiwi dollars, we had this false breakout from at the end of December. False breakout usually leads to a breakdown. False breakdown usually leads to a breakout. Vice versa. So below 66.85, that is going to be bearish. Point 65.85, and I'm going to put multiple asterisks there because I want to note how important the support is. It's huge. It's huge. For those of us that are Kiwi bears, myself included, I may not have, my only short Kiwi exposure right now is long Aussie New Zealand. But if we break 65.85, I probably will start shorting the Kiwi again. I'll buy the pound New Zealand again. I'll buy the euro New Zealand again, those types of things, okay? All right, let's go over to the, well, let's figure out where resistance is. So resistance is, what was resistance from yesterday? We wrote down 66.65, didn't we? If I'm not mistaken, 66.65. We went out as high as 66.77, but really, I mean, that's it. You know, it's really, that's it. Okay. 66.75 is resistance. It's a range, but we're threatening to go bearish here on the Kiwi. Aussie dollar. Retail sales kept the Aussie from slip sliding too much further, but you know, the Aussie's still trading pretty heavy too. You know, you can see here's the Aussie dollar. And I know I showed you guys yesterday. Look at that weekly candle. Gads. I showed you yesterday. I'm looking at more of a butterfly pattern of us pushing down towards like 68 cents. But right now, I think let's remove that. As long as we're below 71 cents, and then support is at 69.80. Okay, whatever that low is. Yeah, 71 cents. 0.6980. That's pretty key for today. We're in a big range, but you know, we're threatening really to break down here in the Aussie too. Let's go into the dollar index. Okay, so here's the dollar index. Let's go out to the daily chart. Let's remove that line for a second. Okay, and let's remove this fib. All right, so what you can see immediately is that trendline support that held yesterday. A couple guys in our chat room like Greg and Ron, I know we're chatting about this yesterday as well. Some really strong support here. You can see the dollar index, really key levels of support were held yesterday. See that? Okay, that means any dip down there going to be very, very hard to break, which is at this stage in the game about 98.25-ish. Okay, so the question is, where's resistance now? So high to low, 38% retracement, 50% retracement comes up there. We have some trend line resistance that's coming into play. Resistance for the dollar index is tough. Really is. So we have this low right here. See that spike right there? This is the 50% retracement, but I think we can spike right past it. That's the thing, especially on a strong jobs report. 98.90. I'll write it down. I just don't think it's very strong. Okay, range. Peso. So only thing we need to know about the peso is if we go risk off, we're probably going to 18. Pretty easy, right? It really is. I mean, if this market goes risk off, so you guys trade in the peso, you guys know. Okay, why is 18 a big deal? A, it's 18. B, it's 161% extension in a very strong uptrend. So that, you know, and then obviously the breakout point was 1750, 18. I mean, that just, if the market goes down, we're going to 18 in the peso. And we're all going to Cabo San Lucas following, or Mazatlan. I prefer Mazatlan. Spent my 2000 New Year's Eve in Mazatlan. Y2K, when the world was coming to an end. I was like, well, hell, if it's going to come to an end, I'm going to do it in Mazatlan. Me and my wife and like 8 other couples were there. Let's see. 17.4700 and 18.000. It's obviously key resistance. Bullish. Boom. Okay, take a real quick look at the Nordic currencies. Just a real quick glance. US dollar, Norwegian krona, just, you know, we didn't get quite a bearish engulfing pattern, and obviously you got to look at crude oil here. I mean, the only thing that's, it's like the Canadian dollar too. It's like the Canadian dollar, I think you have to look at the Canadian and the Norwegian krona. You have to really just trade them more like, you know, more as a proxy to crude oil versus trading them as dollar currencies right now. Okay. So that would be the way I would you know, trade the U.S. dollar Norwegian krona. It's grinding higher, and unless crude is going to make a significant turn, I don't see that really stopping. Okay, I don't know any. Looking at it, there's no real reason to buy it because it's too bullish to be bought, too bullish to be shorted, too overbought to be bought. Okay, so I wouldn't want to do anything with it there. US dollar, Swedish krona, we're still bouncing around in a range, and unless you're going to be trading inside of this 860, well, now it's 861 versus 860, 861 to 833, because we expanded the range from 840 to 860 to 835 to 862. I don't think there's anything to do. There's anything going on in these Nordic currencies. You know, they're just both in very, you know, the dollar Swedish krona is obviously in a little bit more of a range than the Norwegian krona, but there's not a whole lot to do with them here. Not great opportunities to buy or sell. Okay, your bias chart is done. It is finished. So we are 15 minutes away from non-farm payroll. Let me see if I can grab just a couple of questions. Let's see real quick.